So I'm going to be looking at a couple of clips of my own trading, which shows some sort of development from some of the past clips that I've shown, and we're kind of going to pull those apart and see, where they can be improved. We are focusing specifically on the second phase of your execution, i.e., where you're in the trade, you've gone on side, and it's starting to react initially as you had expected, and then just some ways that you can develop this process, or your kind of thought process throughout this phase of the trade to distinguish it from others, and set the context for how you wish to execute going forward, by way of your scaling. So firstly, I just want to crack on and get on to just what we've learned so far from the streams that we've done of our elite trader. So we can see consistently with the way that he executes that it's very aggressive, and it's all about getting your size in early. I think a key philosophy which has been passed on is that your risk is tightest at the start of these either event or data driven moves. So we're not talking so much about technical plays, but more so when you're playing the flows and you feel everything coming together, and you see the price action that you want, or if there's a key input of new information, how we react. So he's often in, just an example here of like a very short biased comment, or a very negative comment, where he will sell a very large clip of, say, 100 bunds, for example, and then from that point he's very tight with his risk as to where he goes offside. Some of the trades which I've shown where I've really lost the most is where you've been in and you've tried to give the trade too much space, but you'll notice as he goes offside he's very quick to quite often half his position, if not more, which just buys you a little bit more space in the trade if you don't see the instant reaction that you're looking for. But otherwise, in the kind of context of the trades that we're going to be looking at some examples of today, where you're in and then the market starts to rotate in the direction that you had expected, we often see him laying small clips, either one or two lots, on the bid, and kind of getting swept out as the market rotates lower. Now, in the very first move, the very first part, I'll call it the first phase of the move, this is often quite kind of straightforward. You've laid your bids, the price action is usually quite fast, so you're going to get hit out of these. But really where the next kind of the decision making process comes in the trade is deciding how you think this will continue, and a lot of this is based on the principle that you want to stay with the trade until exhaustion, until the market's telling you that it's going to do something else. But really the questions that you ask, which we're going to come to towards the end of the stream, which allow you to make this decision, it's very useful just to kind of be cognitive of these questions, so that you can make the decision in what can often be quite a kind of fast-paced environment. And really the purpose of this is to kind of build up a kind of instinctive reaction, whereby you go on side, you instantly ask yourself these sort of 4 or 5 key questions, and from that you can decide how you want to execute, be it whether you think you're going to go on side and the market's going to pull back and do a full reversal before kind of stopping everyone out as it goes to the start of the move, or whether you're going to go on side but likely to have a smaller pullback before continuation, or what often happens is it goes quickly on side, comes back to test the opening price before then rolling over. So these are 3 kind of key scenarios which you often encounter, which is trying to develop a kind of specific way of executing each of these, and essentially just to maximise the opportunity that's offered to you. we're often seeing as well this first option come up a lot more frequently as we see some more, how do I put it, the less reliable sources offering information, where we're trading on either sources from Twitter or either just comments that come across the wires, which aren't necessarily as robust as we would like them to be. So the first example that I'm going to look at, it happened on the evening of the 29th of January, and this is where the UK Parliament was voting on some amendments to what had been put forward for the Brexit process, and each of these amendments had kind of been discussed throughout the day, and we had some clear definitive binary options of what was going to happen. And the amendment that I'm going to focus on was Cooper's amendment, which throughout the day, all the reading that we'd done and all the pricing that had been and the odds that we'd seen on the betting sites, for instance, suggested that this was going to pass. So I was looking to execute this on, very, very distinct scenario where this didn't pass. I felt that there would be a good offer in the cable, as we can see the charts here. Just on the basis that it was a bit of a shock to the system, and I wasn't really looking to execute anything else. I was prepared for it. We had some clear targets, be it where we were trading in this area before the result of the amendment vote was announced. We had this clear low of 93s, which, be it an inside day or the prior day, the fact that we'd broken to the downside, it was kind of just, it was appropriate that we could potentially look at this level to go. Now, the way that it did go in the end was very difficult, but I just want to kind of draw your attention to the fact that, firstly, this was a planned event with a binary scenario, and secondly, the market had been pricing in that this was going to pass, and thirdly, there was some clear targets, and what we're going to see on the recording now is how I kind of entered the position and managed the position, and just going to talk about how I could have potentially done it a bit better on the basis of these things which I knew in advance of the kind of trade being executed and playing out. So here's a shot of my ladders. We can see here just the headlines which I was waiting for, which related to Cooper's Amendment B. So we can see UK lawmakers reject Cooper's Amendment, and focusing here on the cable ladder, although we are trading at the lows at this point, I still knew that I wanted to hit it, and where I'd kind of failed in executing with enough size on prior trades, I think in one of the execution streams where it's we review our elite trader over a Brexit comment and then compare it to my execution, I was getting in and trying to kind of be too small with my initial entry and pyramid, and effectively it meant that I was putting myself under a lot of pressure as the market would rotate and come back towards the opening price, and it was a lot harder to hold your size. So I've really been working on getting more size on earlier on the trades that I really like. In this case, it's a bit of an outlier, so I was quite confident that with those targets in play, there would be an opportunity to really kind of get some size away, and I should see this at least down sort of 30 ticks or so, given the responsiveness that we'd seen of cable throughout these sort of Brexit comments. So I'm just going to play it forward for you, and we're just going to talk a little bit about what I could have done better. So you can see I'm in very quickly with 5 lots, and then as soon as we tick on side, 10 lots. So I'm now looking to kind of get out passively, laying some bids at relatively kind of equal intervals, going down, targeting that kind of 93s area. Seeing the price actions looking quite good. It's taking out prices. There was some bigger bids of over 100 lots that were laid, which was, it was taking out and trading down through them. And just where we are now, I think where I got in was probably about 53s. We've sold off 24, 25 ticks, and I've been getting out all along the way. So I've kind of covered half of my position, but this is where the thought process really needs to come in for me, because I effectively not panic, but I'm just a bit too quick to get out of the position, scared to turn a winner into a loser without really being objective in what's happened. We've got a distinct scenario that's occurred. There's no reason for this to completely reverse. I've got myself out of half of my position. I'm kind of in quite a strong position here to maximise the trade, and where I've laid my bids probably at quite appropriate places. We should see it rotate down lower here, and then potentially take the 93s, but I wouldn't expect it to offer say 50 plus ticks and then splash through the 93s even more. So really looking to work myself out bits above the 93s, with a view to see that as a final target. But what actually happens as we start to drift higher, I'm kind of panicking. I've got my mouse hovered at market over the bid, and I'm clipping out of ones until I'm only left with one lot, which my decision is, right, I can just let this ride now. And then even as this pulls back towards the opening price, where I had got a very good price, so I knew that really I shouldn't see this above 53s, I panicked again and I got out of my position. But really what I want to draw your attention to is how this really could have been maximised. And I probably left potentially at least 30, another 40% of this trade on the table. Potentially could have doubled the amount that I made as we do start to rotate lower towards that kind of 93s area. But really I just want to kind of ask myself the questions which allow you to be objective in that kind of fast-paced environment, especially as it's pulling back towards your entry price. And the key things are you seeing what you wanted to see in the first instance? Yes. Is the market reacting in a way that supports your trade idea? That ties into that as well. And really just the only place that I really could be wrong is if we started trading up above the opening price, be it the 53s. So we can see I really wasn't far away from being quite a good trade, but bearing in mind that I was scaling out after 5, 10, 15, 20 ticks when it pulled back, and then I was scaling out again, around this sort of 48s to 42s region. I'm leaving a lot on the table, given that it's shown that the market wants to move on this, and it's quite a big rotation. I think if it had only gone 10 ticks and then pulled back, there was no way that I was looking to kind of scale out that aggressively, given the price action that was being shown. So that's just the first example. It does show some positive things. It shows that it is possible as a junior trader to execute with a much smaller proportion of size compared to the elite trader we see, who would be trading 100 plus lots on this move. So you can apply the same execution strategies effectively, even if you're only using 1/10 of the size of what you see throughout the streams. The purpose isn't for you to be daunted by seeing them. It's really to kind of take pointers from that and apply them to your own trading, to improve on specifically these opportunities where it's fast-paced moves that come out. So just going to nip back to the slideshow, and we're just going to move on to the next trade. So this is slightly different in that this is a comment which came out throughout the day. The comment actually had 3 components, so we can see from the tweet here, the first one which I heard was China is said to offer path to eliminate US trade imbalance. Actually the first one was China is said to offer 6-year import boost of over $1 trillion. So this is very positive. I haven't got the ladders of the BTPs in this instance, sorry, not the BTPs, the S&P, but the S&P blipped up off my page, and just instinctively I kind of sold one relatively heavy clip in the Bund, which we'll see in the recording going forward, as I felt it was kind of the best market to be hitting after the S&P. But this comment had subsequent parts to it, and the final part, which was said was US trade negotiators said to be sceptical of China's offer. Now, essentially, this part of the statement, it kind of invalidates everything else that's been said, and we often get these headlines or comments come through as a sequence or as a group, and it's very important that you may get in and the initial reaction may support a move based on my favourite part of this headline, which is very, very positive, be it this 1 trillion import boost. But when you hear in your cognitive of the subsequent parts of the comment which may not support your idea, it is an opportunity to execute slightly differently, as opposed to the prior example where it was very much binary clear cut. You've seen what you want to see, now take the trade. So just going back to the recording, I'm just going to play this forward. So you can see we're trading 2021s. Sorry, no, this is the wrong one. Here we go. Okay, so we're trading 23s, 24s. I'd actually been looking to get short in this region in the Bund for the past 4 or 5 ticks, and was actually kicking myself quite a bit that I hadn't. So I was quite ready to hit, be it I didn't get the best price in the world. But just playing forward how I executed here. So you can see this is where the S&P blipped up, the Bund blipped down 5 ticks or so, in with 10 lots, another 10 as I went on side, and then starting to apply the kind of distinct execution style that we've seen, where small clips laid on the bid as the market's rotating down. Now, at this point, all of my bids are being taken out. I can see my risk indicators are pointing in the right direction. I've got Euro Yen, which is dumped. S&P's blipped through the highs. It's off the page. So everything's kind of working in my favour. However, what I had failed to do is acknowledge the third part of that headline, which was really, probably should have understood that this had a good chance to reverse a large proportion of the move. And as such, as this starts moving back against you, it's kind of pointless to be laying bids hoping to get kind of down ticked and taken out, because as you'll see from the price action, it just bids over. There's no more bite. As soon as everyone's aware of that final part of the headline, there's no more sellers, and it just bids over until you're back towards the starting price. Also had to be aware in this situation that it's kind of similar to the cable trading, that I've scaled out nicely out of about half of my position, but I didn't get as good an entry. The move started around 23s, so if I'm going to be willing to see this back to the start of the move, it's going to put me quite heavily offside, and it's going to kind of give back a large proportion of the trade. So this is just an instance where the reaction has been very quick to a headline which sounds very, very positive. However, as we've read more, it's not necessarily as good, and in this situation you kind of want to be a bit more aggressive with your scaling. I don't want to be holding half of my position back to entry. I think at the most probably want to be allowing a quarter of my position to kind of move about a bit with a view that, if this does look like it's going to roll over aggressively, that I can get in some more. But really, if there's two sides to the headline, you want it to be a smash and grab, and you don't want to be seeing this back, be it that you've got quite good size on. For myself, this is my full size, and I have gone from my opening price, which is around 19. I've gone about 10 ticks on side, but we're just going to see how I manage this and just watch the price action as this bids over, as the market becomes aware of the kind of flip side of the headline. You see, it's just bidding over. If we just take it back, I think it's quite useful to watch this again, because from about 7 or 8, it didn't really trade that much higher, and really what I did was fine in that I made money on the trade. But as soon as I was aware of that, I was aware of the kind of the negative part of the headline as we were trading 8s or 9s. It was a good opportunity just to get out of, say, half of my position left again, maybe another 5 lots, and then I could have been a little bit more passive. But you kind of have to make the decision very, very quickly, because as this starts to bid over, it's very easy that it can bid over all the way back up to this sort of 23, 24s area that it started before the move. But as you saw, it did actually bounce from where I got in. So had you got out of proportionally position from there and be left with only, say, 5 lots, as it came back, you had more options. You could have either added to your trade, as we see that our elite trader do quite often. He works the rotations very well in that he's never getting back up to his full size, but he'll be in an equivalent size example. He'll sell 20, he'll go on side, and as it pulls back and it starts to kind of hover off on the top of a rotation, he'll sell another, say, 5 or so, and then cover those passively by laying small bids along the way. But the whole point is to kind of stay with the trade for as long as possible until exhaustion. But if you're aware early that exhaustion point is going to happen much quicker, then use that information and just try to kind of be more aggressive with how you scale out, either laying bigger clips passively, so I could have laid 2 lots instead of 1 lots to get out, or to be hitting out at market and giving yourself a position that you either don't mind seeing back to your opening price, or you can just be a bit more comfortable in letting it flail around a bit before it decides where the market wants it to go. So I'm just going to bounce back. I've got a couple of points which just kind of summarise. It's kind of early days. I've only just started thinking about how to develop this method of execution past the initial phase. A lot of the time it's just about getting the size on in the right position, but just want to make sure that I'm not getting daunted in that point where you go on side. That's where you want to maximize the opportunity and really make as much as you can, given the size that you're deploying and the risk that you're taking. So just some of the key things that key questions that I want to start asking myself as you go on side. So the first off, have I got a good price? It makes such a difference as to your estimation of where the trade could pull back to, given how some of these subsequent questions are answered, that it's really something that you want to be aware of. So have I got good price, and where is that relative to the opening price of the move? Secondly, is the comment or the news or whatever you're trading, is it a game changer? Are we going to see just a reaction based on market positioning, or are we going to see this market trend based on the fact that it's a real something significant has fundamentally changed, that the market needs to reprice this new set of circumstances? The thirdly, as I touched on there, was the market positioning. We've seen a lot of trades where we've been bidding up all day, and we either you can get much bigger reactions off much smaller headlines if it's playing against where everyone is positioning. But if the market been bidding up all day, this is quite obvious that if a negative comment was to come out, all of these people have to unload their position, as well as the new participants who are going to bet on this going down. So they're going to have much faster reactions. Also, just something that I've been kind of trying to pay attention to is when we have a comment which the market doesn't react as we would expect it to do, like it shrugs off very quickly, quite often that can be an indicator of where the market actually wants to go, and it's kind of good information to take on board and to use for your technical trading going forward. So even if you're not executing on these comments or you miss a comment, really try to pay attention to how the market reacted to it, because it can give you some insight into where we want to trade on maybe a higher time scale, and some bigger paper participants might be getting involved. So fourth, is there an opportunity for a denial? Consider the reliability of the source that we're hearing this from. Consider how outlandish some of the comments can be, in that I'd say 50% of all the decent comments that we get are denied at the moment. So it just depends on the time frame that you expect that to happen. But as we've seen with the execution of our elite trader over some of the Brexit comments, we're trading the cable, which often reverses some of the big moves that it has, either instantaneously or after kind of the market starts to digest some of the commentary which comes through. You can not necessarily cut and reverse with big size, but you can start to work an opposing position to maximize some of the retracement of the move as well. And finally, do I have clear targets? Now, if you ticking all of these boxes, so you've got a good price, the comment is a significant change or something that wasn't expected, the market's positioned against you, there's no opportunity for a denial, and you've got clear targets. That's kind of more akin to the first example that I showed you, where you should be holding on for the extended move. You shouldn't be panicking and scaling out of your market as it drifts up towards your opening price, and not leaving something on to at least see if this finds a new low or extends the range of the move. Whereas where we had opposing answers to this in the second example, where I didn't get a good price, the comment was kind of redundant, as the final part of it erased the meaning of the first. Market position didn't really come into it, but it was denied all in one comment, and without having any clear targets. That was one where, being on side, I probably hit my P&L high. I could have made an extra 30 or 40% very, very easily out of that trade by just asking myself these questions. As soon as you start getting negative answers to a couple of them, 2 or 3, you want to start scaling out a bit more aggressively. And just kind of summarize for me a way that I'm going to try to define how I'm scaling out, going from my least aggressive or my least conviction trades to my most highest conviction trades, and essentially it's all utilizing the same method which we've taken from our elite streams, where we're laying orders to be hit as we rotate in the subsequent parts of the move. However, in the first instance, if it's low conviction and I've maybe only answered one of these positively, sorry, one sec, and I've maybe only answered one of these positively, then I'm going to look to scale out aggressively at market, because when you're wrong, these moves reverse. There is no kind of reloading into the bid as buyers and sellers interact. It's just a straight, everyone wants to buy back, in the example of the bunds. And if you're not hitting up market, you're going to be paying up an extra 4 or 5 ticks, which, unless you've got out of more than 50% of your position, you don't really want to be considering that without having the conviction in the trade from answering these 5 questions. And then it's just moving through the kind of aggressiveness that I've chosen for myself, where as my orders are kind of taken out, I'll look to reload those and kind of reapply those orders on top, so that I'm getting out potentially at the same prices, but I'm not kind of chasing higher. Or if we come back to my entry or the opening price, or if it goes through there, then potentially I'd look to puke. In the next kind of, we're moving now towards the higher conviction trades and how my execution should kind of change based on that. And I'll be reloading the resting orders in a similar instance as I said before, but if it comes back to my opening price and the price action looks to firm up a bit, I will look to add a small proportion back in, just to extend the amount of time that you could potentially stay with the trade. As you've seen from how these play out, depending on how much size you get in, the longer you're in the trade, you're always going to be working out of more of your size. And what you don't want to do is get to a point where you've got nothing left on, but the trade's still looking good. So always try to extend that, as you still have a good feeling that there may be an extension of the range of the initial move. And then finally, the last one, which we see our elite trader do often in some of the slower moving markets, like in the bobble, for example, he will only lay new orders at outside of the kind of range of the move. So just as a quick example here, where we've sold off and come back, he would have been laying bids, working him out of his short position all the way down, but then once we've bounced, he won't relay them. He'll look for another extension of the range. Sorry, if this makes sense. He'll look for another extension of the range and only start scaling out again as it moves lower. Now this is a very kind of much more aggressive option to take, and it's obviously where you expect the market to trend and you don't want to be working yourself out at worse prices. It can be also when you're approaching like a daily high or something like that and you're expecting the market to blip through, and again that ties into do I have my clear targets, because it's all in the fine detail. We can see the elite trader, although he's trading maybe up to 300, 500 lots across a number of markets, the amount that he's making based on the size that he's utilising is still very, very high, and he obviously does this quite instinctively after years and years of practice. But so we're just trying to kind of build some of that instinct into our muscle memory or brain muscle memory, so that we can execute in the moment very efficiently. But it wouldn't be unheard of using a similar sort of scaling in the size. If he can make 160 grand or so from maybe 3 to 500 lots across a couple of markets, it's not unheard of using the same scaling that you would be able to make, I think, upwards of 3-4k using your 20 lots. So it just sort of shows that it's not the size that he's deploying that's making the significant amounts of P&L. It's the effectiveness of his execution strategy, which is really kind of maximizing his return on his investment given the risk that he's taking. So I know it's quite specific, but we don't get an opportunity when we're running through the execution streams to really kind of summarize what we've learned and how we want to develop going forward. And this is something that we should constantly be doing if we want to achieve and get to levels similar to that we see of our elite traders.